Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like these videos, and share them with your friends. Yesterday's action was very strong as we pushed well above the 2800 level basis the S&P and continued to move all the way up into the target range that I've been discussing for the last 2 weeks of 2850 to 2920. The fundamentals behind the markets are impossible to determine. There's something interesting going on that maybe everybody forgot about, and it's called earnings season. It started this week. There's only about 70 more releases over the next 3 days, but next week will be pretty substantial. It's going to be interesting to see how companies position themselves going forward. What I've been seeing a lot of is that nobody's going to give any kind of forward expectations. So now what does that mean? That means that the markets are going to be operating in this open world with no expectations pre-built by the analyst community, which every quarter we live and die by. This is going to be substantial, and it's going to create even more uncertainty. The realities are, as we're into this crisis 2 weeks, we don't know when the economy is going to get turned back on. I want to remind you that I talked to you about looking to May 5th. That's the first time you're going to really have things to look at and start to get a good idea of what's happened over the last couple months, especially over the month of April. By June, you're really going to have an understanding of what's going on and where all these major dislocations of capital are occurring. Now, the old saying, don't fight the Fed, all those things are great, but the Fed is just pumping money, buying assets, got this unlimited or perpetual QE that they're doing. But is that actually going to work? I don't know. I'm an American. I certainly hope that we don't go into a depression. That's for sure. But there's still a lot that is unknown. Some of the major talk out in the streets is that we're in a bull market because we're over 20% off the lows. It's a bull market now. If we were in a bull market and we're about to see on Thursday probably another 3 to 5 million people making claims for unemployment, and that will tally up to 22 million people, we could be heading for a 20% plus unemployment level. I would like the historians to tell me what bull market actually had a 22% unemployment rate and the markets go straight up. The reality is there isn't one, and as I discussed last night, there is going to be a point of reality in this market. One of the things I want to alert you to is I am going to look at some longer term aspects. I'm going to stick with the S&P tonight in the technical section just to get a feel for what we're likely to see for the next 2 to 5 months. We're in an election year. Who knows what's going to happen with that? They're going to try to postpone the elections. Everything is uncertain. Everything we count on in daily American life has been disrupted. There's nothing out there that looks or acts normal. You know, when you go around your neighborhoods and you just look around, it just is very eerie. This is not a good thing, and there is a lot of things that are going to have to unfold and be revealed. I'm still alerting you to the oh shit moments. I didn't think that was going to happen. Those are still out there. While the general panic seems to have subsided a bit, it's still elements out there that could trigger hysteria once again. As we go through this week, the market sentiment is going to be very interesting to watch. We saw some things I discussed last night about contraction of the spreads, which is a healthy sign. Today's S&P range was 45 handles, and that sounds like reasonable, but the old standard was somewhere between 12 and about 22 was the normal daily range. But the bottom line is these things have contracted. 45 sounds good. It's better than 200. The contraction of the spreads is good. We're still pushing over 6 billion shares, which is still high, but at least the contraction is showing that we're absorbing this activity much better than we have in the past. That in itself is a warning sign for what's going on. It's interesting, in the days of normalcy when we would get a huge expansion of the volatility, when volatility started to contract, that is when the markets were about to make a change. And that's what we're seeing here. We literally went from 200 handles a day to 150, down to 100. Now we're at 45. And this tells us that we're very close to making a change. My last two videos have been talking about that we're near a top. That continues to be what I believe is happening. There's still some pretty decent momentum I'll talk about in the technical section, but the bottom line is this market is peaking. The market's still got a lot of work to do. The short term has been good. Our models are still long in the short term. It's been wonderful, but it's not a long-term or intermediate signal. As far as ending up and going by year into a new high is the probabilities are quite low, actually around 40%. 6 years out of 10, you're not going to make a new high after a collapse in prices. Now, S&P is only down around 12% on the year. Huge rally, no doubt, but don't get too comfortable because this thing has still got plenty of volatility. There's still a lot of things we don't know. My expectation would be we'd see huge volatility show up again. The downside volatility will ultimately show up again, and we'll be back into some crazy markets. There's still a gap below the markets. There's other things that I'll talk about in the technical section that we need to pay attention to. Let's go ahead and take a look at the charts and see what they tell us. Before we dig into the technicals, I want to show you the performance that is occurring on the WaveTech multivariate global equity strategy. This strategy is up 4.65 for this year. You can see the difference. The S&P is down 11.9. This is now up 4.6. And this has everything to do with being able to be protective when markets are declining. You can see on this chart here that it literally flatlined before this thing started to go down, and then it got a signal. There was a little downside. Now it surged up, and it has to do with this pattern. Now this is a short-term signal. I don't expect this to turn into a long-term signal. We're likely to see some sort of exit out of this trade, maybe in the next 3 to 7 days. We'll see how it unfolds. So in today's technical section, I want to cover a couple things. We'll look at the short-term aspects of the market quickly. And as I've been discussing over the last several days, I'm expecting some sort of peak here. It's interesting that the PPMs that are down below here are not demonstrating any acceleration. In fact, they're seeing a deceleration in the short-term momentum. The PPM2 is at 0.25, which is trend mode, but that also suggests that the major support now is between 26.54 and 25.48. It's very likely we're going to start to trade down toward these levels. We're down slightly overnight, about 0.5%, but we should start to see some downside action. Tuesday's session represented the 9th day in this pattern from the right shoulder. It's very likely we're going to see at least 3 to 5 sessions down, trading down into the range I just mentioned between 26.54 and 25.48. I mentioned in the last couple of videos that 25.25 is a major pivot number. So it does look like we're going to start to see some sort of correction. A lower close today will actually confirm that, and we should see the numbers I just mentioned. Looking at the weekly chart, we can see that the first resistance that was projected for this week was 28.59.29. Yesterday's high, 28.51.85. It also coincides with that short-term target of 28.50 to 29.20. So a lower close today will suggest some minor retraction. Now the interesting thing is, so far this week, we've hit the S1 and the R1 support levels that are demonstrated on this pop-up window. The low so far this week has been 27.21.17. S1 was 20.27, almost an exact hit. And R1 was 28.59.29 with a high yesterday at 28.51.85. Now we're not down a lot of points, so we could see the market print a new high today, but we're very close to this climactic high. As I mentioned, we're seeing a compression of the ranges. A lot of things are starting to set up for a turn in the market and for it to correct this sharp rally over the past several weeks. The real story to be told is on this monthly graph. So far this month, we're having an inside month because we had such a huge month last month. Typically what we're going to see is after an inside month, we're likely to see, as we come into the month of May a potential retest of that 2100 low that we made several weeks ago. This monthly chart is significant, and we're likely to see 2 or 3 months of consolidation before there is a decision on what the directional movement's going to be. Typically, after an inside month like we're experiencing right now, we will see some retracement, probably going down to fill the gap at 2300. Maybe it'll hold at the numbers just mentioned, 2525. There should be a contraction of next month's range. The PPMs are still down substantial on the short term, but there is some long-term support, which we're back above on the 40-month moving average, is at a 0.56. So this level, which is 2732, could be a major support number, and that will be a number that I'll be watching as we come into the end of the month. The range for the month has likely been satisfied. If we do expand this month's range, it's likely to be on the downside just because of the configuration I've been talking about on the short-term patterns. But there is still some positive underlying momentum based on that PPM3 being at 0.56, which suggests there is some support, and it's actually substantial. That number tells us that there's only a 40% probability for it to close below that 2732 this month. To stay above that would be a very positive sign for the next several weeks, which would fall back into what I've been talking to you over the last several weeks of a 12 to 18 week consolidation in an ABCX ABC. If you want to see that pattern, 2 days ago I structured the pattern there. You can watch that video to get a better feel for what's expected. I want to do a shout out for all of you that have been commenting on the videos. They're very inspiring. I'm actually considering doing a live cast tomorrow where I can take questions and actually deal with some of this. There's been so many questions, it's been hard to answer. So keep your eye out. Make sure that you subscribe and you hit the bell just for tomorrow at least, so you can get alerted if I come on and do a live show. And if I do, it'll probably be about 1 o'clock New York time. Thanks again for watching. We'll talk to you tomorrow night.